There is both good and bad. Copper going higher, it means the world is looking better. Oil prices going higher at a time when there are no geopolitical tensions, there is no concern of supply disruption. That clearly means that the commodity market is indicating that the demand is going to be strong. Now that's the good part, which is that we are getting what could be called as a deep swell in the commodity. But good could become bad and bad could become ugly. I don't think in the move in the commodity market so far has become bad or ugly, but another 5% for crude from here, another 5-7% for commodity prices, another 10% for metals, that good actually could become ugly. Nobody will wait for it to become bad. Now, just when markets were convinced that, okay, we've seen the back of inflation, central banks would, in a sense, follow the gentle glide path of cutting interest rates down, just when RBI governor indicated that inflation is coming under control, could this really be the spoil spot? Could really be the spoil spot? Because markets are not prepared that inflation will come back, whether it is in the first half of this year or whether it is in the second half of this year. So I think you will have to be watchful and careful of this price action in metal stocks. But in the meanwhile, I guess the price action in metals stocks, I think, is evident. You've seen outperformance in almost all major ferrous and non-ferrous stocks. Even a stock like Vedanta has almost gone to 300 rupees. Sales had a blowout March end and a great year. So if you're really looking for a short-term interplay, the easiest interplay is that commodities are going higher, you buy metals. Commodities, if they go higher, that's bad news for autos, and autos have started underperforming. So in the near term, I think if you're looking at a transition trade, purely a trade, maybe for a next couple of days, long metals, avoid auto, don't go short anything. I think that trade is clearly evident. So far it's looking okay. Markets are happy that metals are making a comeback. The first, the canary in the coal mine is that demand indicators are looking strong. But the problem with commodity is that what is looking good can become ugly very soon.
But I wonder, when will markets sit up and take notice of crude prices going up, and the way they have?
So Aisha, it's manageable right now. But anything which is above 90 starts inching towards 100, and especially at a time when we've got general elections around the corner, markets will say, okay, what would be the approach? Will there be a fuel price cut? Will there be anything populist? The code of conduct has already kicked in. What will happen to oil marketing companies? And at closer to $100, with rupee plunging to a new low, we've not had a macro ripple for the market per se. So I don't think markets are prepared for a negative macro setup. That is something which is not part of anyone's thought process right now. Because earlier, when you were making a view on the market, you would consider macro, fiscal deficit, rupee, crude. All that macro discussion is simply out of the window. What are we discussing in India? We're only discussing one thing and one thing and one thing, and that is valuations. Nobody is discussing the election outcome, nobody is discussing the pace of reform, nobody is discussing macro, nobody is discussing rupee, nobody is discussing oil, because they have not bothered. You are not there in terms of a narrative, but if you stay here, crude goes to $100, you'll have to start discussing it. So this becomes a new dimension which, in a sense, up until now has been out of the window. You don't want it to come back, but you cannot ignore it if crude goes higher.